2022 has been a brutal year for investors. The S&P 500 is down by double digits. Tech stocks are down even more. Bonds are down. Inflation is up. And it feels like recession is just around the corner. I'm Jason Hall. This is The Smattering. And we know a bull market is eventually going to come. We're going to talk about some stocks today that you'll want to own when the bull market finally replaces the bear. I'm joined by Tyler Crowe. Tyler's going to have a great stock he's going to talk about in a minute. How you doing, Tyler?
I'm doing great. How are you today, Jason?
I'm good. Before we get into our stocks, first thing, I want to remind our listeners we get to make these videos because of our partnership with The Motley Fool. If you're looking for more great stock ideas than even the two we're about to bring now, go to our special link, fool.com/The Smattering. The Fool is going to give you their 10 best stocks to buy right now. Tyler, before you bring up your stock, I want to share a chart here. I think this chart is really good about helping provide some context. This shows from about 1988 or 89, the S&P 500 when it's down from previous highs, right? I think this is a good emotional representation of what it feels like right now. It feels like you can never get ahead when we're in one of these bear markets. But what I think really gives some good context is we take that same chart and we just show its percent of change, its gains, and all of a sudden those tough periods when the market is down disappear. And it almost feels like they never happened. So the point is, Tyler, we know the best time to buy great stocks to benefit from those bull market runs is when we're still dealing with a bear market and those stocks are down. Tyler, what's the stock you want to talk about today?
Sure. Well, I kind of want to talk about a group, and I'm going to cheat and actually mention two stocks, so a little extra bonus for everybody here.
Bonus content, I love it.
I'm going to talk about home builders, and I want to speak specifically to NVR, ticker NVR, and Green Brick Partners, ticker GRBK. Now, part of the reason I want to speak to these specifically on the coming bull market is I think that time is going to be predicated at a time when we start to see a moderation or decline in interest rates. And with that, we're going to start to see the housing market normalize. Right now, with rapidly rising interest rates, it's really hard to justify taking on a mortgage because mortgage payments are very high, but real estate prices have not kind of coincided with that increase in mortgage rates. So when we start to see a normalization of prices and mortgage rates, I think we're going to see strong secular demand in housing. We've talked about it for many other times before. The millennial age cohort right now is in the family formation time, home buying. It's the largest population group of all time in the United States, and it's going to there is a demographic demand for housing that we have not satisfied for a very long time. We've seen some bumps in the road in it right now, as with this rapid rise in interest rates. But when that starts to normalize again, I think that housing demand is going to pick back up again, and it's going to be very lucrative to be adding new housing supply to the to the inventory that we have. Now, that bodes well for all home builders, but I wanted to speak to these two companies specifically because I think they are two of the best at underwriting and generating returns on what they do. There's a lot of nuance that we talk about with home builders, whether it's like, they have option contracts for land rather than owning it themselves, which makes them asset light and all of these. There's a lot of like wonky things people talk about with home builders, but what matters is how good are you at actually underwriting your deals? And these two companies have been some of the best at it. And it has led to spectacular returns in better times for the housing industry. Even today, Green Brick Partners and NVR have some of their best margins despite these challenging times. And at their current prices and valuations, I think there is ample opportunity for people to be gobbling up shares of home builders with these two in mind for the coming bull market.
Tyler, I want to add one other point onto the end of this because everybody today seeing the headlines, seeing home prices actually start to decline, so many people having pulled back from buying houses, all of those realities, at the same time that's happened, the cycle is turned. The the secular trends are still large. You talked about household formations. Another important data point that's worth pointing out is housing starts. And you look at the inventory of housing that just absolutely crashed. And we spent about a decade underbuilding. That structural challenge is a reality. And I think you're right. I think when the bull market returns for housing, it's going to be strong. And there's two really well-positioned companies.
And for weathering the storm, just keep this in mind. Just as an example, Green Brick Partners' net income margins right now are higher than their gross margins were 5 years ago. So even if we do see a decline in margins, they're doing really good right now.
Tyler, thanks for talking about home builders. You know, I'm really passionate about that part of the market as well, and I agree with you. I want to go in a totally different direction, though. I want to talk about Disney, and a lot of focus has been made over Bob Iger's tenure and the struggles of the business and how it has been perceived as falling behind, and what looks like some real challenges operationally with things that Bob Chapek did, and now we have Bob Iger coming back. But I think it might be missed just how much the stock has underperformed over the past 5 years. We're looking at a stock that's down about 9%, while the S&P is up 63%. So this is a substantial amount of underperformance over that period. So why am I going to make the case for Disney? So at a starting point, this is not about Bob Iger coming back and saving the company. Okay. I do think having Iger back and to kind of set the course is important, because some things that he's doing are tied to why I think in a bull market, this is going to be a great stock to own. And the first one is putting more power in the hands of its creatives that are making its creative content, less of an operational focus on the creative side of the business. And I think that really matters. And I think it's going to result in better products. And there are a few companies that have the intellectual property that a Disney has. I think the power of its intellectual property should make it a great company for the next century, not just the next bull market, but you need the right leadership to set that course going forward. I think the other aspect that's going to be important is as we continue to transition to a streaming environment, moving away from traditional broadcasting cable, I think other aspects of its business like ESPN will be able to shine more, and it'll be able to monetize them more greatly as it becomes less reliant on cable for those parts of its business. And it's going to just take time to get there. I think one of the things that we always have to take advantage of when we are in a market decline like this is finding those diamonds in the rough, the high quality businesses that have the great assets with tremendous amounts of power and long histories of success, and buying them when the market gives us an opportunity. And I think that's the case with Disney right now. I think investors are going to have to be patient. It's not going to happen immediately. I think over the next multiple of years, Disney is going to work out to be a great investment for those patient investors.